Okay, listen, y'all, real estate fan folks. I'm about to say 4 blunt things that need to be heard in the real estate community. There are 4 things that you need to stop frickin' doing in real estate here in Q1 2022. Why? Because interest rates are going to the frickin' moon. They're not going to stop anytime soon. I believe the 10-year treasury yield, which is closely correlated to 30-year mortgage rates, and of course 15-year mortgage rates and down the line, ARMs, whatever, are going to go over 3%. And when they go over 3%, we are going to see 5.25% mortgage rates. When the Fed goes too far, we will see periods of panic where the 10-year treasury yield actually goes above 3%. 3.5% is possible. That could lead to mortgage rates of 5.5%, 5.75%, 6%. We have not seen mortgage rates like that, quite frankly, in decades. I mean, certainly not while I've been in the business. I've started in the business in 2009. Yeah, we have not seen rates like this, okay? So look, there are 4 things in the real estate industry that you have got to stop doing. And I'll even throw in a bonus 5th one. But first, this video is brought to you by Public. Go to metkevin.com/public to learn more and get free stock worth all the way up to $1,000. Because after all, Public is an investing platform that helps people become better investors in the public markets. Members can build diverse portfolios of stocks, funds, or crypto within a single platform. And with Public, not only do you get all the tools and information that you need, but Public also makes stock investing social. You can see what stocks people are following on Public and even find me on Public if you go to metkevin.com/public. Public puts investors first, doesn't sell their information or trades to market makers, and does not take money for payment for order flow. And of course, stock trades are commission free. They of course also offer 29 cryptocurrencies, so make sure you go to metkevin.com/public so you can receive a free slice of a stock valued between $3 and up to $1,000. metkevin.com/public. Number 1, this is not the time for renovations. I'm serious. I am getting so many people who feel freaking rich because the real estate market is hot right now and prices are very, very high right now. They're asking me, Kevin, I can refinance. And with that money, I could remodel my home. I could get a HELOC. Come on, man. I want to build a deck. I got asked this morning by a course member, which, by the way, we got a coupon code expiring in 3 days for any of the courses, either real estate sales, real estate investing, do-it-yourself property management, and rental renovations, or, of course, the other programs like stocks and building your wealth. I got asked, Kevin, I haven't gone through all the lectures yet, but I should build a deck right now because I could get a HELOC, and I could get so much money. Come on, I could get a nice Trex deck, one they say won't warp in the sun, resistant to termites and rot. Come on, man. I gotta get myself a deck. No! What are you doing? You're throwing money out of the goddamn window. Listen, look at the stock market right now. If you are a real estate investor, you should always have your eyes on the stock market. Because when there's an opportunity in the stock market and you're below those 50, 30, 20% Fibonacci lines, those aren't the perfect numbers, okay? I'm simplifying because y'all real estate folks, you probably don't even like Fibonacci's, okay? Nobody cares about Fibonacci's in real estate, okay? Stocks is lower than they have been, okay? Simple. When stocks is lower, you don't go spend money on a damn deck. Because here's what you're doing. When you're renovating right now, let me show you, okay? And listen, I have licensed contracting staff. We do renovations all the time. I will never stop doing renovations. I love buying fixer-upper real estate and fixing it up. Okay, I love that. But listen, if you're trying to remodel a stupid home right now, this is what you're doing. You are, number 1, losing money due to massive opportunity cost in the stock market. Or not just stocks, but also because we're going to have this rate shock, you're losing a real estate opportunity. So for all those of you like, I don't do stocks anyway, screw stocks. That's just paper. That's not a real asset. Well, that's stupid because your dumb deed for your real estate is also just paper, but I guess we won't go there. So anyway, you are losing money in both a stock market opportunity and a potential future real estate opportunity in the event we have a real estate shock, which I think is quite likely by the 3rd and 4th quarter of 2022. And all of a sudden you have CNBC and Tucker Carlson and all the financial news media going, oh my gosh, real estate prices are down compared to January. What? Come on, man. Purchasing power goes down as rates go up. This is simple, okay? So why would you take that money and spend it on a stupid deck or some dumb freaking renovation for your own home. It's stupid. It's very stupid. Don't do it. Listen. We almost, personal. We don't need it. I don't want to buy a home for myself right now, but a home came up that we were looking at like, oh, we could use this for like studio space or whatever, or we could move into it because it has a nice backyard for the kids. It came up for lease, which I hate leasing, but it's got a very nice backyard, and there are only like 5 of these homes in the neighborhood. So we're like, okay, maybe we just lease that, and then we'll use the home that we own in the neighborhood as a studio, in addition to the second home that we own in the neighborhood, which is also used for studio and work purposes. So we own 2 homes that we already use for work, and we could just move the family into the one with the backyard, right? We were thinking to ourselves, well, wait a minute. We'd want to update some of the things in the property before living in it. And I'm like, no way, Jose. Am I spending a dime in this market renovating anything for my own benefit? I'll fix it up for a tenant. I'll fix it up rental grade, but I am not wasting that money that could be invested in the stock market or potential future real estate opportunities on fixing crap up right now for myself. No. Big mistake. Second problem. Let's be real. Have you heard of commodity price inflation? Commodities are going, or have gone, to the freaking moon. Look, we don't even have to be technical about this. It's just obvious. Copper is way up. Sheet metal is way up. The lumber costs, the LBS, Google it, okay? LBS lumber prices. You slap that thing into Google. Here, I'll pull it up for us. I don't even have to wait for it to load because I know it's going to be a poop show, okay? We're going to go ahead and pull it up on this little computer over here. And then we're going to go ahead and pull up the 1-year chart. And then we'll look at the 5-year chart together. And you tell me you want to spend money on lumber right now, okay? You tell me if you want to be buying here or here, okay? It's not that hard. Go to the 5-year. You really want to be buying lumber right now, okay? It's no different from, oh, you're not supposed to see that. It's no different from what the Doomberg terminal says about commodities. I look at copper year to date. It's only up 5%. But sheet metal, 25%. Don't even get me started on nickel, up 51% year to date. If we go year over year, I'll try it. I'll change it to the 1 year. Now copper starts getting a little uglier, 15%. Nickel up 92%, aluminum up 52%. Come on. Why would you be spending the money in this market with these kinds of commodity prices? It's asinine. It's stupid. But it's not just the commodity prices that are insane right now. It's the labor prices that are insane for construction right now. But not only is it the opportunity cost, the commodity prices, and the labor costs, it is also the fact that most contractors, the good contractors, are so booked up that what are they doing because they're so booked up? Because all the people who don't understand what investing is or spending their money renovating their homes, you're paying massive, fat premiums right now. It's stupid. You are wasting your money to renovate your home right now. It is a terrible, terrible time to do this. Wait a year. Maybe when the economy's a little bit more depressed or the next time a recession comes around, you think you're going to get good deals on construction when there's a recession? Seriously, think about that. If we are in a recession and you call up a contractor, go, hey, I'm looking to do a deck. But please, I'll be there in 5 minutes. Right now, it's like, hey, I'm looking to do a deck. Yeah, I'll schedule you in 2 weeks just to come take a look at the project, and maybe we'll build it out in 6 months. We'll put you down on the list, and we're going to charge you a fat premium, too. Come on, man. What do you want to be buying? It's stupid. For what? A deck. Get it. It's ridiculous. Renovation's ridiculous. Second problem, new construction. Come on, man. You know you're not getting new construction at a discount. Now, look, I don't want to hear all the people. I know you're thinking it. You're like, oh, I signed a deposit for new construction and the price went up. Well, no frickin' duh. The real estate market has only been going straight up. One of the cool things about new construction is you have a free option on real estate, okay? That doesn't mean you made a good deal. It means you got a free option on real estate. The stock market options cost money. But here's what happens. When the real estate market is doing this and you sign a contract, an option to buy new construction, and it goes from here to here, duh, everybody made money. But you still paid market value. Honestly, you probably paid a little bit above market value because that's what happens with new construction. You tend to pay a little bit above market value. You're paying a little bit more than the neighborhood's actually going for because it's new. It's somewhat like a new car, okay? So instead of buying new construction, you should be insulating yourself right now. You should be trying to purposefully find fixer-uppers. Now, wait a minute, Kevin. You just said not to do renovations. Oh, my God. Well, this is really where we need to take another shot of whiskey. I mean, my first shot of whiskey. Because clearly, if that's your reaction, you're missing the boat, okay? Look, building a deck for yourself is an expensive endeavor. Me replacing carpet for $1,500. Me painting the interior of a 1,300 square foot property and scraping the ceiling for $5,000. Me painting the cabinets of my kitchen on a weekend myself for $500 or less in materials with handles. We'll call it with material. Fine, with handles and materials. That is an investment. That is called making money. I don't care if I'm paying 10% more on a $40,000 renovation for a rental. Okay, so what? It cost me 44 grand. If I'm getting a wedge deal, if I'm getting a below market cosmetic fixer-upper, I'm still getting a good deal. If you still don't know what a wedge deal is, you got to check out those real estate investing programs linked down below, okay? Listen. Buy a rental property, you do rental grade. I don't want to hear that your $499 stove is now $580. But if you're trying to buy a $5,000 stove, you've lost your damn marbles right now. This is not the market to do that in. No. Stop it. Don't build a pool. Don't build a deck. Stop buying expensive garbage. Get invested in the stock market or prepare for deals in the real estate market. And they will not last long. I do not see a 2008 style recession coming. There will be a very short window, if at all. But I'd rather you find a good deal anyway than waste your money on this kind of garbage. It's stupid. This is just dumb. Okay, next. This is not the time for all the aforementioned reasons to build an ADU. I don't care that you think your passive income is going to go up. There's no passive income. Passive income's garbage. Passive income is either active income that you think is passive income. It's you dealing with a tenant or whatever, all the other garbage. Or it's extra cash flow that you get that makes you feel rich, so you go out for an extra dinner a week and then you're left with no actual passive net income because you spent it all. Okay. You should be focused on wealth building. The last thing I would recommend for wealth building right now is building ADUs for all the aforementioned reasons. Contractors, commodities, blah, 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 blah. Okay. Next, there are a lot of people who are pissed because interest rates just went up. They went up a lot. I'll pull up my favorite tool. It's called the Zillow mortgage calculator. Not that big of a deal. It's the Zillow mortgage calculator. Okay. Just take a look at the 2-year chart once it pops up for mortgage rates. There you go. You notice this is not actually 2 years, right? This is actually more like 4 to 5 months. That's a poop show. You went from 2.8 to 4.3. That means if you try to go refinance, a $500,000 home right now, you're probably getting quoted 4.75%. And you're like, what? Other people were just getting 3.5 or 3.25 or 2.8. Why am I getting quoted 4.75 or 4.5 or 4.25? You know what? I'll pay points to buy down the rate. Oh gosh, more people who have not taken the course on real estate investing. Whatever. Oh, but you could just Google this stuff. Why would you have to take a course? Oh, wait, because you can't Google this stuff. Because you won't Google this stuff. Because you don't even know what to look for. You don't even know that you don't even know if you're paying points. You don't even know that it's going to take you 7 to 10 years to break even on paying points for a stupid, dumb loan buy down. Very bad idea to buy down your loan, in my opinion. You're probably going to refinance way before then because J-Powell's going to hike rates between now and 2024. And then guess what's going to happen? Oh, crap, we over-tightened. Time to rotate down. As soon as we rotate down, now the expectation of no more rate hikes goes away, which now amplifies the reduction of rates to the downside. It's not just the downside of the Fed, but now it's the expectation that, okay, rate increases are done. So you see a larger and more substantial drop in mortgage rates. That's the time to refinance. So don't pay the points now. Take negative points right now. What does negative points mean? Okay, so you take a 5.25 rate and you get a free refinance basically. You suck it up for 2 or 3 years and then you refinance in the future. Oh, but what if values are lower? Whatever. Don't take a loan that you can't afford to pay But if you're complaining about a few $100s here or there, quite frankly, per month, you should not be in real estate. If you're complaining about a few $100s of cash flow or not cash flow per month, you should not be in real estate. It's kind of like the people who are like, oh my gosh, Kevin, I'm buying a house with 5% down, and if I were to rent it out today, I won't because I got to live there for a year. But if I were to rent it out for a year, once I live there for a year, I'd have a negative cash flow of $200 a month. Oh my gosh. $2,400 a year is what it's going to cost you? You mean less than your principal pay down is what it's going to cost you to own this property? And you tell me you can't save an extra $2,400 a year? Don't get into real estate then. It's not endorsing negative cash flows. You have a portfolio of negative cash flows, you're going to go bankrupt. You don't want more than one or two of those negative cash flowing properties. But over time, the goal is that you raise rental rates and you catch up to market and your equity goes up. Value goes up over time, and you get out of those negative cash flows in those situations where especially where you're putting down less than 25%. I mean, you put down 25% now in like California, you're going to be negative cash flow. It's going to be the same story. You're going to have to put down like 35% to be break even. But listen, stay away from these big four mistakes. Renovations, overpaying for new construction, building ADUs, paying points. And number 5 as a bonus one, because I promised you a bonus one, is stay away from syndications because they are ripoff. That's all I got. I talked about the ripoff before. Delaying of fees until the end, the massive waterfalls, the advertising pitch of, oh yeah, we'll only buy value add, and then they never add value. They just ride the wave and profit off your own equity. It's bullcrap.